Euro US dollar technical analysis for the upcoming October 19th session. In front of you, you can see the Euro US dollar had a pretty wild session for the Tuesday market after a serious fall at the 50% retrace from Monday. The resulting bar is a long-legged doji, so the setup's fairly simple. Depends on which side we break, and that is the direction we trade. We prefer to the downside because the trend is most certainly to the downside over the longer time frame. However, the actions today did show how badly this market does want to rise. And what I mean by that is we had China GDP numbers come out negative. So the China's GDP came out at roughly 9.1 versus I think it was supposed to be 9.3%. And while that is still ridiculously high growth, it is a little bit disappointing. So the risk off trade came into vogue. Also, with concerns in Europe in general kind of coming back and the parabolic move that we had from the previous week, it made sense that we fell. However, later in the New York session, The Guardian, a newspaper out of the UK, came out and said that there was a 2 trillion euro expansion to the EFSF, which is the bailout fund over in Europe. And it made this pair shoot straight up, and as you can see, it rose, almost wiped out the gains or the fall from the day before. And then later on, just shortly after that story broke, turns out that's not true. There are ongoing negotiations, of course, but it was debunked. So because of that, we had a pretty volatile day. Again, the long-legged doji gets traded in the direction of the break, preferring the downside at this point in time because it is with the trend.